Hey guys, hello everybody. What's going on? Just you're great. Well, guys, on this video, I would like to share with you guys my knowledge on other blocks. Right? I'd like to show you guys what other blocks are and how you can trade with these. So before we start, um, I'd like to say a little bit something about my week. It's been rough, not all break even, but I won't actually say we are good, but yeah, I'm in profit, so I can't complain. But overall, I don't like how things are going this week. It's kind of rough, very 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 rough, very rough. It's something I didn't expect. I didn't actually expect this. I was expecting a very nice week. Last week was very awesome. I was expecting the same thing this week, but I don't know. I don't know. I don't know. Anyways, let's move on with what we have. Okay, now, okay, yeah. Let's move on with what we have. On this video, I'd like to, teach you guys what other blocks are and how to map out these blocks on the chart. So, what are order blocks? According to Google, an order block is the accumulation of orders from financial institutions and central banks. Orders, pending orders, right? Order blocks are actually special supply and demand zones that are formed when there is a block order. So when there is a huge stack of order, mm, when there is a huge stack of order, that's when these order blocks are formed. These are actually special supply and demand zones, right? So we have normal supply and demand zones and we have order blocks. So so that is where the name order block comes from. It is formed by buying and selling of the banks and institutions. So order blocks are special supply and demand zones and the market. So how do we identify these other blocks? How do we identify these other blocks? Well, on the chart, to get an order block, you need to look out for something like this. So let's say if it's a bearish order block, you need to look for an a sharp upward movement in the downtrend, and then an impulse to the downside, forming the order block, and then a bullish order block in an uptrend, a sharp downward movement, and an impulsive move to the upside. Mind you, what you're looking for, or what you should be looking for, is a candle, a particular type of candle, not just anyhow movement. You should be looking for candles, right? Up, down, down, up. So what happens is that this candle takes out liquidity, right? So let's say you have a resistance and a support zone. So what happens? Price taps, hit support, hit resistance, hit support, hit resistance, hit support, hit resistance, and you say, oh, price has hit support. Let's buy, let's buy, let's buy. What happens? It moves up a little bit and then drops, putting people in the wrong side of the market. comes back up to the other block and then pushes down. This here is the other block candle, right? Why? Because it's the last movement before the break of structure, and it caused the last movement that caused the impulsive move. So how do we know these other blocks? What candles should we be looking for? One, we should be looking for the inside bar candlesticks, the doji candlesticks, and the hammer or shooting star. These three candlesticks are the three main candlesticks you should be looking for: the inside bar, the doji, and the hammer or shooting star. So I hope you know your candlestick patterns. You should know how to identify your candlesticks. So let's okay, those are the candles you should be looking out for: the inside bar, the doji, and the hammer or shooting star. So now, what are the characteristics of these things called order blocks? Number one characteristic is the candlestick should take out liquidity. That is number one. Number two, the candlestick, the order block candlestick should break structure, should break market structure. That's number two. Note these things down. Number three, the candlestick should cause a very strong impulsive movement. That's number three. And number four, this candlestick, the next candlestick should engulf it. So if you have the candlestick here, let's say you have the candlestick here, right? It should be engulfed. Let's say it's this downward. It should be engulfed by the next candle. Let's say we have this inside bar here. Let me just map this out. Uh, let's say we have this inside bar here, and these candles. This inside bar should be engulfed. The other block should be engulfed. That's number one. For price to come back down and tap into the other block before moving away, right? So one should take out liquidity. Two should break structure. Three should cause an impulsive movement. Four should be engulfed. That's how you know an order block, right? And these other block candlesticks happen at supply or demand levels, right? Oh, sorry. So they happen at supply or demand levels. So let's just take this out. Let's dive straight to the charts. So let me zoom this out for a little bit. So looking at this chart, what do you see? You see candlesticks, right? Well, these candlesticks mean different things. These candlesticks mean different things. So looking for an order block, what would you what's excuse me. Let's try to identify other blocks. So You'd say this candle is another block, right? It's an inside bar candle. It took out liquidity here, right? The next candle was okay, the next candle engulfed. While it took out the previous candle, it traded above the previous candle, so it's an order block. Now, what do? We map out this other block and then stretch our zone. And what else? Caused an impulsive movement, broke structure. So this candlestick traded higher than the previous candlestick before falling. So it means that it took out liquidity. It took out, if there are traders who trade candlesticks and got their stop loss above here, this candle, what did it do? It took out the stop loss before falling. And when it fell, it broke structure. And when it broke structure, what next? It caused an impulsive movement to the downside. So this impulsive movement, we had a correction, back to the other block. And then what happened? Price dropped. If you take a look at this candlestick traded higher than this candlestick. So for me, it took out liquidity, right? It's impulsive. The next candle was impulsive. What then happened? It broke structure. Sorry, the next candle was engulfing. What then happened? It broke structure, right? As it broke structure, it created an impulsive movement. So if you drag your zone, you can see what happened. As price moved out of the other block, it went back, tapped into the zone, and boom, pushed off. So what else are we looking at? What else are we looking at? Let's just map out these other blocks. All right. So let's take a look at this here. Okay, we had this doji, right? This doji and an engulfing candle. Price got to this zone, reacted, but then dropped forth because, as you can see, the move wasn't impulsive, and that impulsive movement didn't break this market structure. So no break of structure. What else? This move didn't break structure. It wasn't kind of impulsive. So yeah, I'm not gonna classify that as a valid OB. Let's keep looking. So what about this? Let's go down to the daily chart to look at it more deeper. So we have this upward candle, and we had this bearish engulfing. What else did we get? What else did we get? You can take the whole candlestick. What do you see? A push that broke structure. You can see that this particular push broke structure here. This particular movement broke structure here. Still came back, tapped, and then dropped. What else are we looking at? Okay, let's look at this inside bar here. One, it took out liquidity. Two, it moved impulsively and broke structure, right? The next candle was engulfing. So took out liquidity, engulfing, broke structure with impulsive move. Price came back down, tapped and exploded away. Right? So where else do we have these other blocks? Right? Take a look at this place. Take a look at this place here. This was the doji, right? This was the doji. Engulfing. Did it take out liquidity? Yes. This engulfing candle took out its high. So price broke structure with impulsive movement, came back, tapped into the zone and dropped. What else are we looking at? This place, right? Upward movement. Okay. Upward movement, break of structure, impulsive. This whole candle, this whole movement took out liquidity here before dropping. So it's a valid one. Broke structure. What else do we have? We have this. But this didn't take out any liquidity, it didn't break structure, so it's not valid. But then what happened? Price. It didn't even come back to this area. So people were expecting price to come back maybe to this whole range or something before dropping, but it didn't even show. Just maybe tapped into something here, and it dropped. So what else are we looking at? We have here price broke structure. So what broke structure? This whole candle, right? This whole candlestick broke this structure. Didn't take out liquidity, but I'll still add this because it broke structure with impulsive move, and yeah, the next candle was kind of engulfing. So I'll add this. You can actually refine it to this. But then won't actually make sense. So let's leave it here. Took out liquidity, dropped. Alright, let's take a look at here. What happened here? What movement broke this structure? This should be no. This is not it. This is not it. What should we be looking at? We although we have here already, we have this place already, right? So we're expecting price to either come up to this area, right? Price move, tap here and drop, or tap this one and continue to its direction. Why? Because uh this is the other block that caused this whole move. Took out liquidity here, broke structure here, caused a strong impulsive move. While this one also took out liquidity, kind of like broke a little structure, mini structure here, broke a little structure here, But then we have let's just be looking at it, it's either this or this, but it's either this or the next one, right? So it's just you, up to you. It's up to you and what you prefer, how you trade. If you say you want to go for this one, fine. If you say you want to go for this one, fine. But I would personally I would go for this one, or maybe wait for my criteria to align before making my decision. You know. So what else? What else? What else? What else? What else? This is what has been happening in the markets for a very, 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 very long time. For a very, 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 very long time. So we have even here break of structure here. What happened? This whole move, price still dropped. So it's just you should go and backtest all these things. I have the video on market structure. You can go watch it. You learn more about market structure, change of character, and things like that. So once you add this other block to what you know about market structure, then you have a very strong edge in the market. You will have a very strong edge in the market, and there are types of other blocks too. There are types of other blocks too, but I wouldn't want to go deep into that. Let's just understand what other blocks are, right? So it's just basically this. It's just basically this, and then, right? So it's just basically what it is. This movement, right? And then for sales, we have this. Mm, supply, demand. So yeah, it's just what it is. It's what it is. There's nothing much, nothing else, right? So if you have questions on this other block, you can shoot my comments and ask your questions. If you if you don't understand market structure, there are videos for it. If you want to learn market nature and other things, you can check out other videos, right? Don't forget to like and subscribe. Don't forget that. Don't even dare. Don't dare forget to like and subscribe. Alright, so have a great day, guys. Peace and love.